Hi friends, welcome back to the channel. Today I'm going to share with you the trading lessons that I've learned after FOMOing into meme stocks such as Gamestonks and what I've learned throughout this whole process. If you're new here, now realize this is a channel that started out by my boyfriend and I. And on this channel, we explore realization about life, happiness as we pursue our goals. As a disclaimer, I'm not a professional advisor and this video is just for educational purposes and I'm merely sharing my own point of view and journey. And always remember to conduct your own research and make smart decisions. The point of this video is to share my one-year trading journey. Ideally, you should be equipped with the knowledge of a financial pyramid before you start trading. The financial pyramid acts as a guide to manage our personal finance. The levels of pyramids, starting from the bottom, are protection, savings, and on the top tier, it will be your different investments. The basic role of the pyramid is start from the bottom and move up, rather than attempting to address all the aspects of it at once. We are all blinded by the stories of quick wins and shortcut to riches. And since everyone is a genius in a bull market, I wanted to share the lessons I've learned after trading for a year on the potential money-losing traps that you might find yourself into if you are a beginner in trading. 5 things I've learned during the process.
Number 1, trading is not investing. I know that a lot of people out there think that trading stocks is the same as investing in the stock market, but in most cases it's not. Trading is buying and selling over a shorter period of time, while investing is buying and holding over a longer period of time. Taking a longer perspective with your money through investments is a strategy where you can grow your money over a longer period of time. Therefore, trading is to buy and sell, and investing is to buy and hold over a longer period of time. Number 2, there's no such thing as a gut feeling. Recently, I watched a YouTuber share her investment journey where she bought stocks based on her gut feeling. And this mirrors a conversation between me and my sister. She was telling me that she felt like buying a certain stocks due to the fact that she thinks that it will increase over time. There's nothing wrong. Oh, my food is here. Anyway, there's nothing wrong being investors who know nothing and that you are aware of it. The problem is when you are a know-nothing but think that you know something. You need logic and facts before you invest. Similar with trading, there are certain patterns, trends, and technical analysis that you can use to increase your chance of profiting in the trade. For example, you don't get together with someone just because of your gut feeling. You typically spend more time with the person, understand the person a bit more before you be together with the person. Just like jingles over here. The markets are the same. You need to know why you have the gut feeling. Why I say so is because I do make the same mistake of using my gut feelings and invested in companies that I thought would do well. And here's an example. Number 3, consider how much risk you're willing to take. How prepared are you to take a loss? And whether you have the ability to make good on your losses. You will lose money when you start trading. That's where the financial pyramid comes in handy. You will need to have a good foundation in order to start building on the riskier investments. My safety net includes my CPF savings, which is a pension and saving plans for Singaporeans. And I also have a 6 months worth of savings and emergency funds set aside, as well as other safer type of investment vehicles with my financial advisor as well as Stashaway. Knowing this, I am able to accept any losses through my trading, and I'll be able to ride through challenging times and to be able to be more emotionally stable when there is any losses through my trades. Number 4, risk comes from not knowing what you're doing. So don't take unnecessary risk. Don't invest based on hype, meme, or what other people say. You need to know your why before you start investing. You need to know why you're paying X amount for the stock that you're buying into. Educate yourself research, and research. I have true story of the risky trades that I have invested in, and first is actually cryptocurrency, and second is the recent meme stock called GME. So I started investing in cryptocurrency sometime in 2016 and 2017. It was then a risky bet for me because at that time regulators could easily shut it down if it's not the right technology. Countries during that time have just started knowing about what Bitcoin and what blockchain is all about. There was a lot of research that is happening throughout the different countries. Like for example, in Singapore there was a Project Ubin that was ongoing. I remember during that time, Jamie Dimon, who is the chief executive of JP Morgan, also said that Bitcoin was a fraud. So I knew that what I was going into was a risky investment, so I also didn't put a lot of my money into it. After Bitcoin and Ethereum peaked in 2018, it sort of remained stagnant until the recent months. Cryptocurrency is therefore a very riskier type of investment and also a much more volatile investment. There are various applications for cryptocurrency, and if this is something that you're keen to learn about, do let me know and I will create more content and share with you what I know about cryptocurrency and blockchain technology. Okay, the next stock that I have that is pretty high risk is actually Gamestop. So during that time, there was a lot of hype surrounding it, and for me, when I started buying into Gamestop, it was actually at about 300 over per stock. It's really very high. I wanted to see whether the infinite squeeze could happen, and it was quite fun at the time. I invested a couple of thousands into it, but at the same time I minimized my risk by selling some options as well. My overall exposure, now that GME has actually crashed, is still not a lot. So in other words, know your why, don't be lazy, do your research, understand how these financial instruments work so that you can minimize your risk. The ability to make smart decisions only comes after you make proper research. If you choose to be lazy, I would suggest either investing with your CPF or even with robo-advisors such as Stashaways, or just dollar cost averaging into ETF funds. Number 5, do not be greedy. Know when to stop and get out of a certain trade. There were a couple of times where greed consumed me and I wasn't able to exit some of my trades. When I started to learn how to trade options in March 2020, I bought Disney puts way before the actual crash happened. I remember at the time there were 2 circuit breakers happening on the same day, and within a week I was 75% up on my position. I thought it could go even more, so I held on to it. And at the end, when I finally realized is that my position has, instead of becoming a 75% positive, it has actually went down all the way to a 25% loss. So eventually I made a loss instead of a gain in my Disney put options. And therefore, as a beginner, I would persuade that you learn how to take profits and not to be so greedy like me. After taking the loss and re-evaluating my trades, I learned my lesson. I knew that I don't have the ability to exit out on time. So right now, instead of buying options, I mainly sell options. Because at the end, I feel that no one can predict whether a stock can go up or down, but I can value a stock based on the price that I want, and by selling a put option, I'll be able to get it at a discounted rate, and if I don't get it, I still earn premiums on it. Trying to make a quick buck can let you earn faster, but it also can make you lose even faster. What is more important is that you can stay consistently in the game. So therefore, for trading, I recommend that you can create like a itchy fingers account where you can be comfortable with the money that you lose, and to separate it from your main savings and your investments account. We will still need our safer investments and savings in case our trades don't go well. Finance is an area that I have been very interested about, and I've been debating whether to share my journey because I don't really know where to start. It's such a huge topic to address, right? When I got serious with my finances about 8 years ago, there wasn't much, and I don't know where to look for and look at. Most of the time, there were very chim topics that I'm not able to understand as well. So I made many stupid mistakes during my financial journey, like getting the wrong type of insurance and
losing on my options trading as well. I realized this is all like expensive tuition lessons that I have to pay for in order to be better at it. Ever since I found out that not all agents are for our own good, sometimes we do have a conflict of interest as well in terms of what they recommend for us to buy and what we really need. It's always better to educate yourself with regards to what you're buying and not to trust a person completely as well. So through this process, I realized that women in general is not so financially savvy. Most of my friends don't really like numbers, and they either leave it up to their financial planner or to their significant other halves. Some just don't have time to research in detail, or just lack the background or curiosity to find out a little bit more about it. Anyways, I do think that males are more interested in investments as well as financial topics more than female. Let me know in the comments if you are male or female to prove whether my assumption is true or not. I hope this is helpful for you to understand a little bit more about trading and its risk. Please let me know if you want me to cover other topics that you'll be keen to know about, such as my finances, investing and trading journey. I'll be happy to share my realization, my mistakes and lessons that I've learned along the way. Lastly, if you enjoyed this video, please click the like button, and if you would like to join us in our journey, please subscribe and follow our media account to encourage us to share more about our journey. Thank you for watching, and I'll see you later. Bye.
Do not follow what I do, and always remember to conduct your own research, make smart decisions, and if necessary, seek a financial...
Oh my god, it's so hot. Okay, I'm going to put two things here, so got space, right? Okay, can, done.